Hi, this is Michael Rony Mullick, and you're watching the Post Market Show. Today is the 27th of May, and the first trading day of a new series. As you know, in the FNO contracts, they expire on the last Thursday of the month. So the May contract ended yesterday, and today we start with a fresh day, and everything looks very, very positive in the market. So everything ended in the green. The global clues are very good. US markets, European markets, Asian markets are trading well in the positive, and Indian markets have carried on with the same positive sentiment and also traded in the green consistently for today. So that is something good happening in the markets after a long time. Hopefully the markets have reversed for the very short term. Bank Nifty looking very, very strong as usual. So for the last few days, Bank Nifty is very, very strong, more stronger than Nifty, and that has been reflected in the strength in Bank Nifty and the banking stocks specifically. IT index is also doing very, very good on backs of positive positive closing in Nasdaq yesterday, and so the IT index is also up. IT, banking both contribute majorly to the Nifty's index. So when both these sectors outperform, the Nifty has to move up, and that is exactly what we are seeing in the markets today as well. Talking about two news which was announced today. First was more importantly, there was reports in the market that government may consider some windfall taxes on oil and gas producers, and this has led into a major sell-off in the oil and gas producing stocks. So Reliance is down, ONGC is down, Oil India is down, Vedanta is down. So this is after reports in the UK on 26th of May, that was yesterday. The UK government has imposed a 25% windfall tax on these companies, oil and gas producing companies, to make sure the inflation is under control. So the same move may be taken by the Indian government as well, because the government is spending huge amounts of money and on subsidies to keep the prices down. And recently we saw the announcement where the central excise duty was cut on petrol and diesel prices. So government, they are doing huge amount of public spending, so for that they need to get more taxes from these companies. So that is why the government has implemented such thing. And also, since the global crude oil prices are rising, so these companies will stand to make a lot of profits from that, for the rising crude oil prices. So that is why the government has planned to do so. So now these are just reports, and people are panicking because of the the UK, which is already implemented the 25% tax, and that is why we see a major sell-off in the stocks. Like I told you, let me show you the charts. ONGC is down by 5.3%, Oil India down by 4.28%, Vedanta 1.66%, and Reliance by 0.46% today. Now all of these contribute majorly to this, they fall in this category, and so these are hugely down. So government is imposing this on both the public as well as the private sector companies in this. So both the Reliance as well as the government companies like PSUs like ONGC have fallen today. So this is the major news. And one more major news which was announced today, that the RBI annual report has come in, and in that they have mentioned that there will be a loss in momentum in the economic recovery. And for that, two reasons were highlighted. What are the two reasons? First, very high crude oil prices, and the next is the global supply chain has been hit severely because of the the Ukraine-Russia crisis. Ukraine is known as the breadbasket of the world, and Russia is again known for its major exports of natural gas, crude oil, and then precious metals. So these two countries, since they are in a conflict, so we can expect further supply chain damage. So that is why the government is preparing for a economic slowdown in the recovery, which was happening post pandemic. And maybe there are possible reasons for the recession which other countries, the most developed countries, are fearing. So it's also looming around the corner, so that is something to watch out for. So this was the two important news for the day. One is the RBI annual report, and next one was that windfall taxes on oil and gas producers. So this was the major highlights of the day. And so talking about Nifty, Bank Nifty, both traded well in the green. So let me open up the charts. So Nifty, you can see that it traded very firmly, and it did try to show some bearishness in the morning. Let me pull up the charts of Nifty. Yeah, you saw that the market took resistance around support around 16,250 260 levels, and from there it reversed and it ended almost on the day's high. But we see around 1350, that is around close to 2 o'clock, we saw a big candle forming, almost 80-point candle, but it was the way it fell, it was also recovered in the same candle. So that indicates the markets are still bullish. Maybe some FIs were trying to pull the markets down, but they were not successful in their attempt. So this is how the Nifty has closed. And talking about Bank Nifty is very strong. You can see the day's opening was never touched the entire day. The markets kept on moving higher and higher, ending up almost 1.48% in the green, up by almost 518 points. So this is how Bank Nifty has traded. Talking about the sectoral indexes, out of 11 sectors, almost 9 of them closed well in the green. 2 sectors which underperformed, obviously Nifty Energy is down because of the government tax decision, and then the Nifty metals are slightly down today, almost flat, 0.06% in the red. So the rest of the sectors all ended in the green. Major contributor being the IT sector, up by almost 2.5%, and also the Nifty Media is also up by 2.5% is what we see. Talking about index movers, we see that Infosys has been the major contributor to Nifty, then HDFC Bank, ICICI Bank, Kotak Bank, Bajaj Finance. So again, the IT stocks and finance stocks are dominating the top gainers, and obviously Reliance and ONGC are the top draggers of the day. So they had pulled the markets down significantly because of this news which was passed around. So this is the sectoral indexes, the view. And talking about FII, DII buying and selling activities, FII continue to sell the markets, selling around 1900 crores for the day, and DII outmatching their sell figures, buying of around 2700 crores. So the net institutional figures are positive on the second day. So yesterday we saw the same thing happening, today was also the same. So this is the FII, DII buying and selling activities. We have discussed this. Next, talking about the open interest. So open interest, very interestingly, first look at Bank Nifty. It is very positive, and OI data is showing exactly that. 35,000 seems to be a very important support. We have the highest amount of put build up for the next 2nd June expiry, that is next Thursday. And we also have an at the money put, so 35,500 put being written also aggressively, which indicates the markets are very bullish. The people are expecting the markets to not break 35,500. So there has been a good amount of put addition. That is why the PCR is indicating 1.15, which means simply more puts are written than calls. This is Bank Nifty, and let us look at Nifty. We will see that in Nifty the things are also very similar. The put call ratio is at 1.07, and across board we see a lot of put being sold today. After many days, people are actually selling puts, expecting the markets to have reversed, at least for the very short term. And one more interesting thing, 16,300 straddle is being created. This means people are selling both 16,300 calls and puts and expecting the markets to trade in this range. So right now the straddle premium is going around 400 points. So you plus and minus 400 points from 16,000 and you will get the upper and lower break even, so which is coming to 15,900 on the lower side to 16,700 on the upside. So this is what people are predicting as the next week's range to be. So that is slightly on the bullish side, but still this is again a good range, and people are expecting the markets to continue its upward momentum in the coming days. And we see a huge amount of put built up at 16,000, indicating the markets will not be breaking 16,000 by next Thursday. And on the upside, 17,000 seems to be a very strong resistance for Nifty, because we have the highest amount of call being written at 17,000. So this is how the things look on the OIE basis, open interest wise basis. We have discussed this. And now talking about the US markets, let us see how the things are happening over there. But before that, let's look at the VIX first, and then we'll look at the US markets. So India VIX again came down by 5.5%, ending the day at almost 21.4. So it is coming down after it's crashing 10% yesterday. Again, it is coming down, so which is again a good thing. VIX in the US is also down by 5.5 percentage, almost 26 right now, so 25.9. So that is good to see the VIX coming down significantly, and because of the US markets are trading continuously in the green. So yesterday we saw they are trading firmly in the green. Today S&P 500 1.7 percentage up, Nasdaq again 2.5 percentage up, and Dow Jones seem to be 1 percentage up. So again the US markets look very, very positive right now. So all the markets have ended in the green, because you can see all the global sectors. So Hang Seng, the Japanese market, the Korean market, South Korean market, the Hong Kong market, Chinese market, UK, German, everything ended in the green. So we are seeing a huge positivity in the global markets. And so this is how the things look like. But one thing to worry about is the crude oil prices. So if you look at the daily charts in crude oil, you will see that it is nearing the top ceiling or the resistance of this zone. So markets have been trading in the zone since March. So March, April, May, June. So it's almost three months right now. So 3 to 4 months the markets have been trading in this zone, and it seems that we can have a breakout on the higher side. And if that breaks out, we can see that the market had made a high on 8th March. Almost $130 is where it touched. So this is again something to worry about for the markets like India, because it's already struggling with high amount of crude oil prices, and then this can be again a major damage to the economy. So crude oil prices is on the higher side is the only bad thing we can see right now in the markets. Talking about dollar index, it is down. It is on a downward trend, so that is good. It's trading at 101 right now. USD INR is also stabilizing at the same zone which we had talked about for many days. So from 16th of May, it is being trading in this range, and it is also in that range as we speak. So this is how the things look globally. So we talked about the VIX, and also the US data came. The US GDP data, we saw it came negative 1.5 percentage, but the markets did not react because it was a lag indicator. Markets believe that this is already incorporated in the price, and the markets already was in a very, very bad trend, and they expected all the bad things are over. So the markets did not react to that, and actually it went up yesterday, and today is also it is firmly trading in the green right now. So this is how the markets are right now. Everything looks very, very positive. Hopefully this can continue in the entire series of June. There are 5 expiries, so it's going to be a long series, 5 Thursdays. And so we will be discussing the levels of Nifty and Bank Nifty on Sunday's week ahead show, and also we will discuss how the US markets have ended and what we can expect going into the markets in the next week, and also if any important economic data or indicators are going to be announced, we will be discussing that as well on the Sunday's week ahead show. So with that, I will be ending my post-market show right here. I hope you had a good time and wish you a very happy weekend ahead. Thank you for watching.